Hi everyone. How are you tonight? I'm having a really good night myself, and part of the reason is the primary thing I'm going to talk about tonight, which is Bernie Sanders' new wealth tax plan. Hi, Dolores. Hi, Dale Weaver. Yeah, you got the front seats tonight. Hi, honey. And hi, Greg Mallard and Russ Gallman. Nice to see you both. Dale says, doing great, Doc. Looking forward to tonight's talk. Well, thank you, Dale. I appreciate it. And Amber Lee is here. Hi, Amber Lee. How are you? And Russ says he can hang with us for an hour. That's great. We may be wound up actually by then. I think this plan of Bernie's is shorter than some of his others, but it's really kind of outstanding, I think. So let's share the plan. Well, let me share the plan, and I'll go through it. So you should see it up on your screen now. And it looks like okay, it's large enough. So Bernie, of course, points to the extreme amount of income and wealth, inequality in the United States. He points to the fact that millions of Americans are working 2 or 3 jobs to feed their families. And of course, he points out the wealthiest people in this country own more wealth than the bottom half of the American people. He points to over the last 30 years, the top 1% has seen a 21 trillion increase in its wealth, while the bottom half of American society has actually lost $900 billion in wealth. In other words, he says there's been a massive transfer of wealth from those who have too little to those who have too much. For the sake of our democracy and our working families all over America who are struggling economically, that has got to change. Of course, he's right about that. Other people have said things like that as well, but no one has proposed the kind of wealth tax that we are about to get to do something about it. I do want to emphasize here what a great danger to democracy the concentration of wealth in our country has been. We see the increasing concentration, we see the results, we see the feedback loop, and we see the increasing control of our government by the very, very wealthy people who get exactly what they want because of their domination of Congress, of both houses, okay, of Congress. In order to reduce the outrageous level of inequality that exists in America today, and to rebuild the disappearing middle class, the time has come for the United States to establish an annual wealth tax on the extreme wealth of the top 0.1% of U.S. households. Now keep that in mind. only 0.1% of U.S. households would be subject to this annual tax on their wealth. It gets more specific. This wealth tax would only apply to net worth over $32 million and would raise an estimated $4.35 trillion over the next decade. Anyone who has a net worth of less than 32 million would not see their taxes go up at all under this plan. So, for everybody in the 99.9% of U.S. households, their taxes would not go up under this plan. Bernie then says, or his website says, the revenue raised under this plan would be used to fund Bernie's affordable housing plan, and also the universal child care bill, and would help to fund Medicare for all. So this sentence, of course, says something that many of us here do not like, that this tax plan is going to be funding things. Of course, we know that tax revenue doesn't really fund anything, that the reserves added to the Treasury spending account are added by the Federal Reserve. They make the additions to the Treasury spending account, and they make those additions by virtue of the power that Congress has given them to create reserves, to create additions to the balances in the Treasury spending account. So it is Article 1, Section 8 that empowers the additions to the Treasury spending account. It is not the taxes. It is not the tax revenue that is collected. Bernie goes on how the tax on extreme wealth would work. This tax on extreme wealth would have a progressive rate structure that would only apply to the wealthiest 180,000 households in America who are in the top 0.1%. It would start with a 1% tax on net worth above $32 million for a married couple. That means a married couple with $32.5 million would pay a wealth tax of just $5,000. Now, do you think they can afford that? Do they really need that $5,000? I don't think so. Now, that rate of taxation would apply to the $17.5 million between $32.5 million and $50 million. So all of those people would pay 1%, which means that people who were making or who were worth $49 million a year would be paying more like, I believe it would come off the top of my head to $200,000 a year in taxes. Okay. Do you think a couple worth $49 million can afford to pay $200,000? I don't think they would even miss it. But that tax rate would increase to 2% on net worth from 50 million to 250 million. So people who made $60 million would pay the roughly 200,000 for the segment from $32 million to just under $50 million, and then they would pay 2% or twice that amount on wealth going from $50 million to $250 million. Now that gets to be much more substantial, but again, people making $249 million can certainly afford it. They can certainly afford it. I haven't computed what it would mean for them, but even if it means $1 million per year, if they're worth 249 million, they can certainly afford to part with that. The tax would be 3% from 250 million to 500 million, 4% from 500 million to 1 billion, 5% from 1 billion to 2.5 billion, 6% from 2.5 to 5 billion, 7% from 5 to 10 billion, and 8% on wealth over 10 billion. And Bernie points out these brackets are halved for single people. He points out under this plan, the wealth of billionaires would be cut in half over 15 years, which would substantially break up the concentration of wealth and power of this small, privileged class. He should have said extremely small and extremely privileged class. Under current law, the IRS is already required to assess the net worth of the wealthiest Americans when they pass away to calculate estate tax, um, um, estate tax liability. A federal wealth tax would require the IRS to make the same assessment on an annual basis for the wealthiest Americans. Steps would also be taken to streamline the process for purposes of the wealth tax. For assets that are difficult to appraise, the Treasury Department would have the option of allowing taxpayers to have appraisals done periodically instead of annually. The Treasury Department would establish the average rates of appreciation for several classes of assets. Those appraised only every few years would be assumed to appreciate in the intervening years at the average rate established for their designated class. That sounds fair to me. Assets placed in a trust would be treated as owned by the grantor of the trust, by the person giving assets to the trust until that person's death. So this is to prevent people from placing all their wealth in a trust, and escaping the tax in that way. It is fair. It is fair. Next, Bernie points out that a wealth tax is enforceable. He says, in order to ensure the wealthy are not able to evade the tax, the proposal includes a number of key enforcement policies. First, it would create a national wealth registry and significant additional third party reporting requirements. Second, it includes an increase in IRS funding for enforcement and requires the IRS to perform an audit of 30% of wealth tax returns for those in the 1% bracket and a 100% audit rate for all billionaires. Third, the wealth tax includes a 40% exit tax on the net value of all assets under 1 billion and 60% over 1 billion for all wealthy individuals seeking to expatriate their money to avoid the tax. So, in other words, if you don't want to pay the tax and you want to go overseas to avoid paying the tax, you can give up 60% of your wealth over 1 billion right from the asset. But right from the get-go, I should say. Right from the inception of the tax. And if you're worth between 32 million, okay, and 1 billion, then you can choose to lose 40% of your wealth at one shot. Finally, the wealth tax proposal will include enhancements to the international tax enforcement and anti-money laundering regime, including the strengthening of the Foreign Account Tax Compliance Act. That will help with international enforcements on any wealth taxes that other countries might choose to impose on their extremely rich people as well. So that's a very good thing. So this plan is really a terrific plan. And to see more on how terrific it is, we'll go over a few other items that have appeared in articles, and in one case, in an email. But the next section points out that a wealth tax is constitutional. And he says, since 1916, we have taxed the inherited wealth of the richest people in this country through the estate tax. He says, for more than 100 years, we have taxed investment income from capital gains and from dividends. In order to reduce extreme inequality, we must establish a tax on the net worth of the top 0.1%. Bruce Ackerman and Ann Alstott, two highly respected Yale law professors, have both written in support of a wealth tax on the richest Americans in the country. Here's what they wrote for the LA Times on September 20th, 2011. In the United States, anti-tax zealots will try to use the Constitution to cut off debate about a wealth tax before it begins. Article 1, Section 8 grants Congress a plenary power to impose any and all taxes, duties, imposts, and excises, but it contains a special limitation on, quote, capitation and other direct taxes, unquote. Under this little-known proviso, such taxes may be imposed only if they are apportioned among the states. If they are apportioned among the states according to their population. This provision was part of a compromise with the slaveholding South, and its intention was to prevent the North from imposing a head tax on slaves, because this could not be apportioned equally among the population of all states. And Bernie then says, given its origin, this provision has consistently been construed very narrowly by the Supreme Court, which has found only head taxes and real estate taxes to be within its scope. Given this history, it's extremely unlikely that the justices will cite the founders' original compromise with slavery to bar a tax that would serve the cause of economic equality and of democratic legitimacy. The Roberts Court may be conservative, but it is not quite as reactionary as all that. Unquote. Uh, and he cites also many more articles, including the very recent one published by the American Bar Association, making the unambiguous case for the wealth tax's constitutionality. And he says demanding the wealthiest Americans pay their fair share isn't radical. The reality is we already have a wealth tax in America, the property tax, and it disproportionately impacts working class families. One of the biggest sources of wealth for middle income families is owner occupied homes, which are taxed in most states at rates that can be as high as or even higher than 1%. Moreover, the vast majority of wealth owned by the top 0.1% is not housing or real property and is not subject to any sort of property tax. And he says this proposal would ensure that assets owned by the top 0.1% are taxed the same way as much of the wealth owned by the middle class is already taxed. So, that's the proposal. It sounds really, really good to me. We're going to check out some commentary on it. First, from Bernie Sanders himself in an email today. He says, I want to ask you to clear your mind for a moment and count to 10. In those 10 seconds, Jeff Bezos, the owner and founder of Amazon, made more money than the median employee of Amazon makes in an entire year. That's not the lowest employee, that's the median employee at Amazon. An entire year. Think about that, he says. We live in a time when millions of Americans, including many Amazon employees, are working 2 to 3 jobs to feed their families. Again, this is what he said also in the introduction to his plan. But he says something a little different down here. He says, this is how much more in taxes some of the richest people in America would owe this year. The Walton family, $14.8 billion is what they would owe if a wealth tax were in place. Jeff Bezos, 8.9 billion. Charles Koch, the Koch brother, 3.2 billion. Sheldon Adelson, 2.6 billion. And Rupert Murdoch, 1.28 billion. I thought those amounts were very interesting. You can see that over 15 years, taxes like that would have a substantial impact on the wealth of those people, and they might not be so free with their money to try to subvert our democracy. So I thought that email was fairly interesting. There was also an interesting article on this in Common Dreams today. Jake Johnson was the journalist who wrote this. and I'll go through part of what Jake had to say. Of course, he goes through the basic facts on it. Let me blow this up a little bit, make it easier to see for you. I'm not going to read what Jake had said here because I've already mentioned some of this. Here's a quote from Gabriel Zuckman, Emmanuel Saez, who are two of the most important writers on the concentration of wealth, okay, and inequality in the United States. And they say, quote, a progressive wealth tax is the most direct policy tool to curb the growing concentration of wealth in the United States. Okay, and in a letter that analyzed the proposal by Bernie, they said, quote, Senator Sanders' very progressive wealth tax on the top 0.1% of the wealthiest Americans is a crucial step in this direction. Oh, that is a direction of curbing the growing concentration of wealth in the United States. And then there's quotations from Bernie Sanders, where he said the things that he also said in the introduction to his plan. And here's something new in Jake Johnson's article. Morris Pearl, chair of the Patriotic Millionaires, has applauded Sanders' wealth tax proposal in a statement on Tuesday, calling the plan a welcome addition to our national tax debate, unquote. Quote again from Pearl, the wealthiest people in this country haven't been paying their fair share for a long time, and part of that problem is because our tax code only taxes the wealthy based on how much income they choose to take each year. And the very rich get money not from earning it each year, but from spending wealth that they have already made. Quote, if our tax laws only target one without touching the other, then rich folks like me will continue to find ways to game the system, and our inequality crisis will continue to get worse. We are thrilled to see this proposal and look forward to more dialogue on this critical issue moving forward in the debates. Unquote. And that's the end, okay, of Morris Pearl's statement. I thought that was a very interesting statement from Morris Pearl and very relevant. I was thrilled to see this proposal today. And the reason why I was not because it would collect $4.3 trillion over 10 years or $430 billion a year that could then fund, quote unquote, other programs. But I was thrilled to see it because it is by far, the most important thing that has been suggested thus far to make a direct attack on the extreme concentration of wealth in our country. The concentration that has, over a period of time, been a main factor in destroying our democracy. So I was thrilled to see this. I thought that Bernie would stand pat with his previous wealth tax, which was not really too heavy. But he came out fighting here. He came out fighting. And he upped by a considerable amount the wealth taxes that had been proposed by Senator Warren. And that's relevant also to note. But even more relevant is the idea that by taxing substantially people who make over $32 million, that begins to get an extremely serious problem without having an impact on the middle class and even on most of the upper class. It only has an impact on 0.1%. Almost everybody will agree that people worth more than 32 million, couples worth more than 32 million, are worth too much. And especially that couples worth 1 billion or more are worth too much. As Bernie says, and as others are increasingly saying right now, we think that the billionaires should not exist. It is just too much money for any two people in a democracy to have. So, I'm going to check in with Facebook now and see what comments and questions you have. A lot of comments today. Amber says, hi, Dr. Joe. And Amber says, I'm wonderful making lasagna. Well, that sounds wonderful. Jimmy Sutherland has joined, and Steve Day has joined also. And Steve Day says, large here. Not sure I know what that is. Greg says, good evening to everyone. Greg Mallard, that is. And Steve Day says, knowing MMT basics will do strengthens our demands. Yes, it does. Dale says, hey, Gregory. Kay Jenkins has joined. Hi, Kay. And Greg says, good evening, Dale. And Steve Day says, why IRS collections are called returns. And Cora Emanuel has joined. Hi, Cora. L. Stephen Day says, yes. I'm not sure what he said yes to. And Dale Weaver has joined again. Rocco Million has joined. He says, hey, Dr. Joe. Hey, Rocco. Haven't seen you for a while. I missed you, kid. Steve Day says, these percents are less than the 1950s. Yes. Not as a wealth tax. I mean, remember, this is not an income tax. And we're not talking about, okay, an inheritance tax either. If I recall correctly, there were no wealth taxes just on straight wealth, no annual wealth taxes, but during the 1950s. And even though the income tax rates for the highest brackets were technically at 90%, the loopholes in the tax laws were so extensive that very few of the hugely wealthy people were paying 90%. In fact, people who invested in the area of local bonds sold by the municipalities in the United States had their interest that they earned on their local bonds tax free because the government was trying to encourage investments in the local areas by rich people so they didn't have to pay any taxes on their municipal bonds all through the 1950s. And this went on all through the 1950s. There were many people who were worth millions who weren't paying a penny in taxes because they sunk it all into local bonds. That was addressed in the tax reform during the early 60s that came out of the Kennedy administration. And Bonnie's joined again. Jimmy said, so is this wealth tax a state tax? Did I hear that right? No, it is not a state tax. It is a tax on individuals. It's like it has the same constitutional status as the estate tax had, and the same constitutional status as the property taxes levied on the middle class have. And Rocco says it's amazing how many don't understand what a marginal tax rate is. It is amazing. Rocco says that's news to me. I think it's federal. Yes, you're right. It is federal. Dave Phelps has joined, and Elizabeth Bergen by Netherlands has joined. Hi, Elizabeth. Nice to see you, and nice to see you, Dave. Jimmy Sunderland says, okay. Devore has joined. My daughter, of course. And Amber Lee says, happy to hear tax loopholes are being addressed. And Rocco says, tax the billionaires out of existence. I don't see the existence, but I assume that's what Rocco meant to say. Rocco says a wealth tax is constitutional. Yeah, those are the arguments. Kenneth Lee Fredrickson has joined. And Rocco Million says, I gotta run. Thanks, Dr. Joe. Keep giving us the facts. Jim Burt has joined. Thanks for coming, Rocco. Thanks for checking in, Jim. And Russ Goldman says, those are some big numbers, but it only takes a tiny bit, in my opinion. Greg Mallard says, Bernie is right in what he says. Yes, he is. He is right. And he is bold. And it is right up front. And it is getting us there, along with the rest of his program. And Steve Day asks whether Morris Pearl said it. Yes, he did, okay, but it's actually Morris Pearl. It's Morris, as opposed to Maurice Pearl. And Greg Mallard says that he quotes Jimmy Carter as saying, okay, that America is an oligarchy with unlimited political bribery. And what Bernie is trying to do is to limit the bribery in various ways. And this is not the only way. Greg Mallett says before 1971, when we were still on the Bretton Woods Accord and gold standard, the marginal tax rate at its highest was 90%, and that was under a Republican president. I don't believe that that's quite true, Greg. As I recall, during wartime, I believe the marginal tax rate on the extremely wealthy under the FDR administration went up to 94% at one time. Okay, I have to Google that again, okay, and double check it. At one time, I had memorized these tax rates. They got up pretty high, though, under Herbert Hoover, which is not very often actually known. I think Herbert Hoover, if I recall correctly, hit 80 or 85% highest tax rates. So he was a Republican who was quite a taxer, even though he was very wealthy himself. And Gred says, I'm looking it up right now. Yeah, there should be a table of marginal tax rates since the income tax was passed in 1916. In other words, from 1917 on up. So double check me, Greg. But as I recall, the highest tax tax rate was not under Ike. You are correct. It was at 94% during World War II back in 1944. Yes, that figure was hard for me to forget. Hard for me to forget. It was such a stunning figure. And what was the highest figure under Herbert Hoover, Greg? As long as you have the figures there. So I recall it was pretty damn high. Okay, I'm going to change the subject now, but feel free to continue to comment on the wealth tax plan. But I'm going to change the subject because I want to say a few words about the Democrats finally undertaking a formal impeachment inquiry. Greg says the figures shown were between 60 and 65%. Okay, thanks, Greg. Still a very, very high tax rate, income tax rate compared to what we have now, right? Okay, so going back to what I was saying, the Democrats finally chose to move forward with an impeachment inquiry. Now, I'm of the opinion that it's far too late. They should have instituted an impeachment inquiry as soon as they took over the House in January of 2018. That's almost the first thing they should have done. Because as of the start of the 2018 congressional session, in fact, as of the start of the 2017, actually, I got my years mixed up. When they took over in 2019, at the beginning of this year, the first thing they should have done was to have started, an impeachment inquiry. Okay. When the new Congress came into office in 2017, of course, the Republicans had control of the House and would not have been willing to support, an impeachment inquiry. But that date is still important because from the date of his inauguration in 2017, Donald Trump has has been benefiting in impermissible ways according to the emoluments clause of the U.S. Constitution. Specifically, he and his family, his corporations, have been receiving profits from his hotels since his first day in office. That is prohibited by the Constitution of the United States. That alone was grounds for impeachment. Not to mention any of this more exotic stuff. He has profited in 100 ways from being the President of the United States. This could have come out in hearings begun in January of 2019. Instead, they have now waited until nearly the end of September. They could have been finished with impeachment by now. It long since could have been presented to the Senate. And the Senate could have gone on record as supporting it or not. But Trump was violating the emoluments clause of the Constitution from the first day he took office. And there's no excuse for the House to allow it to go this long. Now they have created a situation where their stupidity, their continuing stupidity, could lead them to create a circus. Trump will be pushing them to create the kind of circus that will depress turnout seriously in 2020 and work to the advantage of Trump. It will distract attention. The circus of this kind will distract attention from the discussion of the issues. It will distract from the campaigns of the progressives who want to do something for the United States. It will distract from the Green New Deal campaign and building up support for that campaign. Okay, now Tulsi Gabbard has not been on board for impeachment, and she wasn't on board as of today either. And her reason for not being on board was she thought it would be terribly divisive. And it will be terribly divisive if they carry on the kind of grandstanding impeachment that they're likely collectively to want. Remember, the Democrats in our Congress appear to want to run on the replacement of Donald Trump. There are probably a lot of them who are not even serious about impeachment. They're taking it up as an opportunity so that even if the Senate does nothing, it creates a situation in the election of 2020 where they're hoping the reputation of the Republican Party will then be so bad that that will be the only issue, how the Republican Party acted during the impeachment of Donald Trump. They want people to vote in 2020 solely on the issue of whether Donald Trump ought to be replaced, solely on a negative Trump kind of platform. Because then one of their mediocre candidates who take corporate money can win. That's what Nancy Pelosi is going to seek to do with impeachment. That is what the leadership of the Democratic Party in Congress is going to seek to do with impeachment. That is what the DNC is going to seek to do with impeachment. What we have to do is put our weight behind having a quick and clean impeachment based on the emoluments clause of the Constitution alone. This business, the business of impeachment, should be done and brought to a conclusion by the end of this year. It should not be allowed to go further. They should do a quick 2-week investigation in the House of violations of the emoluments clause. And when they've uncovered, maybe 10 of them, and there certainly will be more than 10 violations, of the emoluments clause, they should stop and say, we have enough, take the impeachment vote, send it to the Senate, face the Republicans with the political choice of impeaching him for violating the Constitution, for clear violations of the Constitution, or standing behind him and running on that basis in 2020. If they can do that by the end of the year, then the damage, the political damage from the impeachment process will be minimized, and the good that can come out of the impeachment process will be maximized. And then the American public will be free to fight out the election campaigns on the issues, on the substantive issues. Trump will be gone. Cora says here, the DNC is trying to prop up Biden with this impeachment. I'm pretty sure the DNC will drag their feet through the election. Okay, the Congress and the DNC are separate. They are separate. Sure, the DNC will try to prop up Joe Biden through this process by trying to keep all negative Biden news off the front pages. But it is not within the power of the DNC to drag their feet. It is within the power of the Democratic Party in Congress to drag its feet. I am saying we need to hold their feet to the fire now. And we have to let them know in no uncertain terms, that this impeachment must be quick. It must not involve any Russiagate BS. It must not involve anything having to do with the personal scandals, of Donald Trump. Forget that. Just focus on the emoluments clause and the gains that have accrued to his family through his presidency. Focus only on that. Hold the impeachment vote in the House as early as possible And then the pressure will be on Mitch McConnell to do what he's going to do. If he refuses to take it up, then all manner of Democrats will have an issue to run on. But the other issues can still be heard. I don't think the DNC can put pressure on the Dems in Congress to go slow on that. Now, they can, I'm sure, put pressure on Nancy Pelosi and on the leadership, and then she, in turn, can decide to delay the proceedings. We have to fight back against that right now. We have to do whatever we can to get pressure from the progressives to speed up the proceedings as much as we can to get them out of the way. So Trump is either gone or there as a president who has been impeached and was only saved by the partisanship of the Republican Party, if they want to play it in that way. And the Republicans will be faced with a choice. Will we impeach him and make Pence the president and clear this out of the way so we can fight, so we can grab the credit for being nonpartisan about this, and then maybe run a respectable campaign in 2020 that we might have a hope of winning if we ran a kind of centrist the type of a Republican, like, say, Romney again or somebody like that? I don't know. That's a possible strategy. Or they may just try to go down the line with Trump and see if they can get sympathy from the public for him. Steve Day says, I will suggest rapid impeachment to my representative. And I'll go see mine, and I'll suggest the same thing. It is imperative that this be done rapidly. Rapidly. And the choice be presented to the Senate. And it's politically valuable for the Democrats to operate in that way. And Pelosi needs to be pressured, okay, to do that. So I see Steve has come on. He's probably going to make a statement against impeachment. He entitled his stream that, an impeachment inquiry is going to be like a drug. Yeah, because it exposes, the people on the Judiciary Committee to the public, and they can grandstand. Yes, it can be a drug. That's what I'm afraid of. Okay, Russ Gorman says, the Republicans left respectful behind a long time ago. You're absolutely right, Russ. Well, they have. Okay, so I think I'm going to let you go to go see what Steve has to say about this. I'm sure he'll have to say some interesting things about it. And meanwhile, I've said my piece for tonight. And I'll see you tomorrow night. Maybe I'll have some more thoughts on the impeachment process, but if not, I'll have a really interesting show on another great topic, so I hope you'll join me then. Thank you for joining me tonight. And please don't forget, please share, like, and subscribe. Please become a patron at www.patreon.com/Joe_Firestone. And now I'm going to end the stream. Thank you again for coming.